Well, it is now time to turn our attention over to the grain markets. There has been a buzz in the air this week when it comes to the U.S. and trading partners. In particular, a China delegation meeting set to be held in Switzerland. That gave the grain markets a little bit of a boost. Then on Thursday, the president made an announcement alongside UK about the future of that trading partnership. To talk about all this news, we were joined on Thursday morning by Darin Fessler. He's with Lakefront Futures and Options. Darin, I think it makes the most sense to start today's conversation on trade because here, as you and I are visiting, the president set to announce a trade deal with the UK. We also have the possibility of the U.S. and China sitting down for trade talks. Do you think the market has factored in these trade deals, these potentials, or is there a lot of upward potential in the grain markets?
Well, obviously the trade talks with China, obviously the biggest competitor we have for a lot of trade and economics, it create a lot of nervousness. Now, again, I don't think there's going to be a whole lot that comes out this weekend. President has already said we're going to leave those 145% tariffs in place for now. It's just what type of concessions will China give? What type of concessions will the U.S. give? And really, what does this relationship, if you will, look like 6 months down the road here? Because nothing is going to change next week, next month. These are going to be a long-term trade talks with China. There's no question about it. Where I get a little bit more nervous is because China is such a big buyer of Brazilian and Argentina beans. Where does our relationship go moving forward? Are we going to try to hold China to the coals a little bit? And hey, are you going to abide by that Phase 1 trade deal, the original one that Trump had when he was in office the first go around? So I think that's probably what I'm looking forward to the most here in these trade talks.
Okay, so for our viewers today, Nebraska ag producers in particular, the grain farmers right now, short term, we have to have trading partners. But long term, do you think we as a country need to be looking more at our long term possibilities for how we can take advantage of and use corn and soybeans, I suppose more so soybeans in particular, long term?
Yeah, I think that we can't rely on one major buyer to have 50% of our market share. That's not going to work in any business model. And again, we need to have domestic policies in place that pushes the renewable biodiesel, probably more ethanol side of things. Because when you look at how big a competitor Brazil has gotten over the last 5 to 10 years, they're, I hate to say it, more or less eating our lunch when it comes to the export business. And we're still going to be exporting stuff, but we're not going to be exporting the type of stuff we've been doing, even 5 years ago. So we need more domestic policies that focus on the domestic producer and not reliant so much on these export business. That export business is going to be there, but we need some other avenues for our producers here, especially Nebraska producers, that we can utilize our products here at home.
It seems like there is some groundwork that's been laid with new crushing plants and so forth that have been in place over the past few years. But things like sustainable aviation fuel, we haven't seen the policies, in particular the tax credits, follow suit, and perhaps what you've hinted at is during the Trump administration that could come to fruition?
I certainly hope so. I think this administration is probably going to be a little bit more friendly on those type of regards and probably less focused on the electrical side of things.
Okay. Let's talk about corn for a second. Tell us where we're at right now and what you're watching in terms of technical support levels, where that market could be going.
Yeah, I think next week with the WAS report, May is usually a time frame where we get those new supply and demand numbers, and that's usually when the market likes to bottom and run into that seasonal high in the early parts of June. I think with the managed money has really sold off here quite a bit. That they've given us some more or less, they've got plenty of ammo in the tank here if the weather continues to persist and be dry. I mean, I think Nebraska is the bullseye spot for dryness right now across the country. But if that persists or even moves into Iowa, I think there's looking at some pretty good opportunities yet this summer, into that June, July, August timeframe where, we still going to be looking at this huge yield number from the USDA. Take that with a grain of salt. If we factor in some weather, that 170, 175 may be a more likely number we can use for corn. And then we got to be able to reward these rallies when they come and probably be aggressive if the weather models do change.
Similar story or different for soybeans?
Soybeans, fundamentals are not all that great, but it's being led by the optimism of soy oil. Beans are in a precarious spot. I mean, we're seeing some pretty good demand right now from the Mexicans. That's always good to see because they're not usually big buyers of beans right now. So if we have some weather issues, a new crop, we're not going to get these acres. We have some weather. I do think beans can move higher, but likewise with corn, about every 50 to 60, 70 cents in beans, you're going to be wanting to reward that.
Mm-hmm. You brought up weather a couple of times, obviously, both in relation to corn and soybeans. Nebraska, the bullseye for that. You've shared some longer term, some seasonal outlooks for moisture, and it doesn't look pretty for the western corn belt, not only Nebraska, but also extending into Iowa, based on the models I've seen. What's your biggest concern weather-wise over the next month or two?
Well, Nebraska, obviously, we have irrigation, and irrigation is only as good as the subsoil moisture. And that's, I mean, we have a lot of tenants that are running pivots right now just to put herbicide on, just to get the corn coming up. So that's my concern, is if Nebraska runs hot and dry for a long period of time, those pivots are only going to be so good. And so if that stretches into Iowa, where we don't have as much irrigation, that's the market where the market's going to take note of that, and that's where we're going to hopefully get our seasonal balances and rallies we need to reward.
Mm-hmm. You talked about managed money a few seconds ago. Bring me up to speed how they're positioned right now, corn and soybeans.
Well, as those managed monies, those are as of a Tuesday. Okay. So right now they're probably about 20,000 still long. I mean, I've seen some estimates. Maybe they're even right now. So again, like I said, there is plenty of ammo if they want to get back long this market in a more aggressive manner. Same thing with the wheat market. They're aggressively short wheat here. How they unwind those short positions could be a good factor for corn moving higher. Same thing with the beans. Funds, momentum type traders are pretty max short right now, in my opinion.
Okay, I want to talk strategy with the time we have left today. You're all about strategy and getting ahead of the markets. You're not kind of in a situation where you don't have two good options in front of you. As you see it right now, we've talked about May perhaps being a seasonal low. What kind of strategy are you advising people on?
We've been out of old crop corn here for a while, since January. New crop corn is where our main focus is right now. So if you get a move back towards 470, 480, I think you have to be looking at the money puts, selling some calls to finance it, put it into a collar position. However, when you sell those calls, just make sure it's backed by physical and it is a marginable position as well. Same thing on the beans. We're looking to buy, put, sell calls. If you're not in that camp, look to HTAs near that 480 mark. And then on beans, let's start in at 1035, work our way up to 1050, and then 1079. Those are all HTA targets we've laid out for clients, and scaling in here about every 10-15% on those moves higher, regardless of what the weather does right now. We want to be probably about that 50 to 65% by the middle of June, July timeframe.